Hey there, good morning. It's Trisha with Easy E-mini Trade, and today's video will be trading tips and tricks video number 3. So today I'm going to go over using the volume profile for finding your support resistance areas, and then I'm going to go over the Kijun line entry setups for yesterday, and then on Wednesday next week, the 22nd at 4 p.m. I'll be doing a full-length webinar going over the specifics for the information about the different little tidbits I've been talking about. And I'll be able to do it in more detail, obviously, because I'll have more time. But I'll go over how to use the double stochastic to basically get a heads up for stalls and or pullbacks, how to use it also for spotting divergence, which would be an advantage when you're in like a reference area of support or resistance if you wanted to buy the bounce or take a pullback off of resistance, or if you're in a trade just getting a heads up when it's going to move against you. Then I'm going to go into detail how to use the volume profile to find support and resistance, and then also I'm going to go over the Kijun line entry setup in complete detail. I won't go over all of the Ichimoku components in long, detailed information, but I will give you the webinar from last month, which does go over the Ichimoku in full description and explanation. But this setup I was still working on and testing, so that's why I didn't present it with the Ichimoku last month, but I'll go over that next Wednesday. Okay, so let me show you some stuff. Okay, so what you're looking at is NQ on a 15-minute chart, and this is 8:16 on Friday morning. And you can see I've got the volume profile over here on the right-hand side, and this is just showing for the current day. If you look over here, you can see yesterday. And so if you're somebody who struggles with knowing which areas of support and resistance are likely to get a reaction, you can just simply see where you have the highest concentration of volume, and then you can just draw a line. So you can see that's like the highest concentration of volume, and then you can just kind of look at the price bars and see if you want to fine tune it. And basically what you're looking for is like a common area between, it doesn't matter necessarily what part of the bar, but I'll look for common areas between the high, low, open, close. It doesn't matter to me. So like here, this is what I would probably mark somewhere in this area here around 69, 69 and a quarter, because this is a little bit more of a common area amongst more bars, right? I can probably even drag it up just a hair more. Yeah, I like that better actually, 69.50, let's say, because I've got the high of this bar, the open of this bar, the high of this bar, high of this bar, general area of the high of this bar, high of this bar. So I like that. Or if you drag it down here, and what you have to remember about support and resistance is that it is not an exact science, it's just ballpark areas. So you can pick an area and be close, like within a point or so, and that's fine. So it's no right or wrong way to do it, but you want to have an idea of where price is likely to hold up. So if you look at this area here at 68 and a quarter, that looks like that has a lot of common areas as well. When you look here, you see the open of this bar, close of this bar, open here, open and close here, close here. So again, like I said, you just have to kind of figure out, which one you want to use. And like I said, all within a point, definitely acceptable. And then here, this one's pretty easy to see on the underside here where that volume kind of drops off. And keep in mind, this is pre-market, so they're likely not going to be, a whole lot of volume coming in at this time of the morning unless there's news. And so if I look at this, probably what I would do is I would probably just go down here because I like this better, just because, so I could see like I've got the lows of a lot of the bars here holding this area here at 65. So drawing the line based on the volume can be your starting point, and then you can fine tune it. So I can see this little area jutting out right here. I'm going to just draw a line, and I'm just going to kind of look at the price bars and see if that looks like a good area for next reaction. So I'm going to say, yeah, I like it. But you can see right here that we have volume, higher volume in this area as well, which you can see that would also work, right? Because we got the high here, the open close area here, close area here, open here. So that could work also. Now if we look at yesterday where we've got more volume, so let me just scroll over here real quick. So you would do the same thing. Where's the high concentration of volume? And so for me, I always leave my support resistance areas on my 15-minute chart, and then all I have to do is look back at just the previous day and see if I need to adjust any. And so in looking at this, all these support resistance areas were already on here. So I'm just going to look and see if I need to adjust any of them. This is yesterday's high and close. Otherwise, I would have some support and resistance marked in those areas. So I don't need anything there today because that'll show up on my chart. But on Monday, I'll have to, put my support resistance lines back on there. So in looking here, you can see, even right here, you can see you've got this little opening in volume up here, and then it kind of picks up here. So this could actually be a support area here at 1950 area. This one here, these are all kind of close together. In the market, depending on how it's moving, sometimes the support resistance areas can tend to be a little close together. And what that's going to tell you is that is generally an area of previous chop, and just giving you a heads up that it's probably going to be difficult to get runners in those areas. So very important to know where price is likely to react. Generally, when the market is not chopping sideways a lot, you'll find that you'll have on the 15-minute chart between 8 and 12 points between support and resistance. And then here you can see we've got a high volume area here. So you draw your line, wherever that high volume is, and then you can just kind of adjust it based on where you see you've got price action. So I can leave it where it's at 4, or I can move it up a little. I think I'm going to move it up a little. I'm going to move it up here because this looks like more common area, even though it's in the afternoon. But you could see here, close of this bar, open close here, low here, close here, open here. So that's, to me, is a more common area, and it falls right in that high volume area. So I like it. And I already know that coming into that round number 9100, generally 5 points above it and 5 points below it generally are going to be the area where NQ gets stuck around the round number. So definitely practice with that, you guys. I think you'll find it helpful. Then if you want to take it one step further, you can actually put this, this is a 60-minute. It doesn't matter what size chart you put it on, but this is giving me the whole week's volume. So at a glance, I can quickly look and see where all the high volume areas are for this whole entire week leading up to this moment. And so obviously you could see where we've got the higher concentrations. It doesn't matter. You can put this on a 15-minute chart with a week's worth of volume. Totally up to you. But that's helpful because at a glance you can have a quick view of where the likely trouble spots are from this week. And then if you look back here, you can see last week as well. So nice to have a quick overview to gauge where price is likely to get stuck. And I'll go over that in more detail in Wednesday's webinar next week and walk you through setting up your charts. If you're not using a volume profile, I would definitely urge you to test it out, even if you are good with support and resistance. All right, so now what I want to do is I just want to quickly go over the Kijun line setups from yesterday on NQ. This is a 1-minute chart, so I'm just going to go from 9:30 till like a little after lunch. And what I did was I removed the Chico line. For now, I just want to show the Kijun line and the cloud, and it's just a little easier to get it off the screen, but I'll show you during the webinar how to use the Chico line to your advantage doing this setup as well. So we've got our regular double stochastics here, and I'll go over all the settings on Wednesday's webinar, no worries. And so what I did was I just marked all of the ones that were closing above or below the Kijun line. The Kijun line is the purple line that you see right here. I should keep that as an arrow. Kijun line is the purple line here. So here's where we opened, 9:30. So I wouldn't recommend doing anything literally right off the open, but you do whatever your plan calls for. This green line that you see here is the previous day's high. So this is yesterday that you're looking at. So this would be Tuesday's high here. So here we get closed above the Kijun line right here, green line above the red, so we could take that. So if it's not too early for you, you enter in a tick above the high, which would be 4, and then you would be looking realistically around the high of the day for that to likely react. And keep in mind that at this point, this is coming close to the all-time high. I think at before yesterday, it was at 14. Either way, so there you are. We're above the cloud. We're good there. So you decide what your target would be. If it's in new territory, then you can use the floor trader pivot method of divide in half and in half, and I'll go over that in detail also on Wednesday. So this one, valid. Now for me, like I said, I have that zone around the round number that I generally will stay away from, and this is a little too early for me, so that would be a pass. Here you get closed below, right here, where I got this black arrow down, green line above the red, so it's not valid for the short. Here you get closed above, green line above the red, now you can take the buy. Now, if the market is choppy, just always look to the left and just get an idea of where price last reacted. So if I was looking at this and I had taken this as a buy, I would just be ready for possible reaction here around this 1475 area based on this spot here where it was reacting, and then you would be looking at the high of the day. So always just have an idea in the back of your mind of where price is likely to react, so you're not sitting there waiting for a huge runner and it's hitting resistance and it's going to come right back and stop you out. So that would be a valid buy there. So here we have a close below the Kijun line right here, and it's literally just coming into being valid because the green line is below the red, yes, but that red line up until that point was in overbought. So if that remained in overbought, I would pass on the short. So if you take this short, if you are familiar with the Ichimoku, you know that the cloud has to be at least considered as your support area, right? So if you take this short, you'd be looking down to the top edge of your cloud as a possible reaction area, and then the lower end of the cloud, and then back to the support area. And you know that you're likely going to get a bounce or a stall here because we got our 40-point gapper there as well, right? All right, close above the cloud here, technically valid. Green line above the red. However, it's literally into the cloud. That's a pass. Now what I would do, you guys can figure out how you want to enter, how many bars you want to give it, but let's say that you get a bar that doesn't trigger on the next, like your entry doesn't trigger on the next bar. So let's pretend we want to take this high, you know, an entry above this high here. Let's say it's 4 is the high, so 4 1/4 is our entry. Let's just pretend we wanted it. And the next, so you put your buy stop in at 4 1/4, and the next bar does not trigger your entry. That for me would be a pass. I'd cancel the order. So if it doesn't trigger the entry on the very next bar, then I would cancel it. Here, you get closed below the Kijun line. Technically not valid because of our green line being above the red. So that would be a pass. Now, I'm not saying that you can't use any of your other setups that you trade. I'm not saying that you didn't have some other kind of setup there. You know, literally, if you're keep bouncing off support, you could keep buying off support, but that's not what we're talking about at this moment. We're talking about just this specific setup. Here, you get a close above, green line above the red. Now, here's one that would not have triggered. So let's say we wanted this. We already know that we're in this really congested area here. Around the round number, but let's just say that we wanted that buy. The high is 3, so you'd be looking at 3 1/4, and you realistically would use that cloud above you as resistance if it triggered you. Now, this is what I was just talking about. Can you see how if we put our order in above this candle, this next bar would not have triggered our entry? So when this bar is complete and it hasn't triggered your entry that's sitting up here, then you cancel. Here you get closed below. Now, this one is literally right on support of the previous day's high, and it does not technically agree because our green line is above the red. However, let's say that yesterday's high was not, the previous day's high was not there, and we saw we had this 40-point gapper. We have a pretty good indication that price is likely to go sideways or move lower to fill up that space, right? So if you want to be aggressive, obviously you can be. Here you get the buy, green line above the red, it's valid. So we already know we're under the cloud, so we have to use the cloud as our possible reaction area, right? Now keep in mind, if price does not move higher up to the cloud here, and then go sideways, it can run into the cloud that is over here, obviously in our future, because that is always moving, it's dynamic, okay? So just keep that in mind. Next one here, technically short is not valid, right? Because green line is under the red here, but the red's in overbought, so that's a pass. Buy here, got the previous day's high there. It's not valid because of our green line being under our red, and we came out of overbought. If we were still in overbought, I still wouldn't be interested in buying, taking a buy literally into the high of the previous day, because we know that that is likely to be a reaction area. And so here you can just see these back and forth arrows all in this area, and none of them really going anywhere. You get the short here, technically valid. If you wanted it, anticipating down to the cloud, it never triggered you on the next bar, so you cancel. This one here, you close above, not valid here. This one here, we close below, not valid here. Here, you get the idea, right? Here, close above. Now, anything in the cloud, I would use caution. And if you do anything in the cloud, you're going to use the top part of the cloud as resistance, bottom part of the cloud as support. So I'm not going to do any more here, but you get the idea, right? And then when you see the cloud is like this, really skinny and narrow, just stay away from doing these setups until it either gets out of the congested area or the cloud gets a little bit bigger. Okay? All right, you guys, as always, thank you for your participation, and I hope to see you on Wednesday. Have a great day, you guys.